Welcome. This video outlines the 2026 Wealth Roadmap, a framework for achieving financial independence developed by Marcus Hale. We'll explore three key paths to building wealth in today's economic climate: strategic investing, entrepreneurial ventures, and lifestyle optimization. Path 1 of the 2026 Wealth Roadmap is strategic investing, which combines passive and active investment strategies to build long-term wealth. Passive strategies involve buying and holding diversified assets like index funds and ETFs, which track market performance without frequent trading. Active strategies require selecting specific stocks and timing the market, such as investing in dividend stocks that pay regular income. Both approaches emphasize long-term sustainability through ESG criteria, which consider environmental, social, and governance factors. Effective asset allocation balances risk and reward, such as a 60-40 split between stocks and bonds. Compound interest is the interest earned on both the initial principal and the accumulated interest from previous periods. This creates exponential growth over time. Dollar-cost averaging helps mitigate market volatility by investing a fixed amount regularly, regardless of price. This strategy buys more shares when prices are low and fewer when prices are high. Entrepreneurial ventures involve starting or scaling your own business, whether it's a side hustle or a full-fledged venture. This path emphasizes innovation and adapting to market feedback to create sustainable opportunities. A key approach is the lean startup methodology, which involves an iterative process of generating ideas, building minimum viable products, measuring results through data, and learning to improve. Consider leveraging modern tools like ChatGPT for rapid prototyping and testing business concepts efficiently. Set clear goals for your venture, including developing innovative products, securing funding, and achieving operational growth. Consider profitable side hustles as entry points, such as those in video animation, writing, or marketing, which can provide initial revenue streams. For scaling your business, focus on leveraging technology, embracing automation, and aligning your team to drive sustainable growth. Entrepreneurial ventures can create jobs, generate significant revenue, and ultimately lead to financial independence through innovation and adaptation. The lean startup methodology emphasizes rapid prototyping and MVP testing to validate ideas quickly. Bootstrapping involves starting with minimal resources, minimizing debt, and reinvesting profits for growth. This approach works particularly well in AI, biotech, and e-commerce sectors. Lifestyle optimization focuses on maximizing your financial resources through three key approaches: frugality, generating side income, and strategically reducing debt. The first component is frugality, which means living below your means and cutting unnecessary expenses to save money. Second, generating side income through part-time work, freelancing, or monetizing hobbies provides additional earning streams. Third, strategic debt reduction involves methods like debt snowball or consolidation to pay off debts efficiently and save on interest costs. Together, these approaches work to free up capital that can then be directed toward investing or starting entrepreneurial ventures. The FIRE movement focuses on achieving financial independence to retire early. Its key principle is the 4% safe withdrawal rate, where you can withdraw 4% of your investment portfolio annually without depleting it. Budgeting apps like Mint help track expenses and identify savings opportunities by monitoring spending patterns. Comparing income and expenses over time reveals areas to cut costs and build wealth. The FIRE acronym embodies the movement's core principles. Upskilling through education can lead to higher wages, increasing savings potential for financial independence. Diversification is crucial across all paths. It means spreading your investments across different asset classes like stocks, bonds, and real estate. This approach reduces risk by not putting all your eggs in one basket and can enhance long-term returns through balanced growth. An emergency fund serves as a financial safety net, covering 3 to 6 months of your living expenses. It protects you during unexpected events like job loss or medical emergencies, preventing you from derailing your wealth-building efforts by avoiding high-interest debt or depleting investments. Continuous education plays a crucial role in wealth building. Commit to ongoing learning and staying updated on financial trends to make informed decisions in an ever-changing market. Use platforms like Coursera to build essential skills in investing, entrepreneurship, and personal finance. These resources provide structured learning to enhance your financial knowledge. Ultimately, knowledge serves as a valuable asset for navigating the complex financial landscape and achieving your wealth goals. Artificial intelligence is transforming wealth management. Robo-advisors like Betterment automate investment strategies. Generative AI tools can boost entrepreneurial ventures by accelerating prototyping and marketing efforts. ESG investing, which stands for environmental, social, and governance, is rapidly growing as investors prioritize sustainable practices. Green bonds are a popular ESG tool, where funds raised are specifically used for environmentally friendly projects. Socially responsible investments screen companies based on ethical criteria, avoiding harmful industries, and supporting positive impact. Micro-investing apps democratize wealth building by allowing small investments, making it accessible to younger generations and those with limited capital. Inflation steadily erodes the purchasing power of money, as shown in this graph of the consumer dollar's value from 1940 to 2014. During periods of inflation, real assets like real estate often appreciate faster than inflation rates, providing a hedge against rising prices. Geopolitical tensions can create market volatility, but they also open doors to resilient sectors that thrive despite global challenges. Sectors like renewable energy continue to grow, offering investment opportunities in sustainable technologies that benefit from global energy transitions. Demographic trends significantly influence financial strategies. Aging populations worldwide create strong demand for retirement-focused investments. As life expectancy increases, people need sustainable income sources for longer retirements. Younger generations are increasingly drawn to entrepreneurial ventures and tech-driven solutions. Adapting to these shifts helps optimize wealth-building approaches for different life stages. Jane Doe, a 35-year-old teacher, demonstrates strategic investing by allocating 70% of her portfolio to Vanguard's total stock market ETF and 30% to bonds. This ETF tracks the entire U.S. stock market, providing broad diversification through thousands of companies. Her asset allocation resembles this balanced approach, with most invested in stocks for growth and bonds for stability. Over 2 years, Jane's portfolio grew 15%, outperforming many aggressive strategies and providing passive income for travel. This example shows the power of consistent, diversified investing in building wealth over time. Tech entrepreneur Alex Chen launched an AI tutoring app in 2025, securing $500,000 in seed funding through AngelList. Within a year, the app scaled to 100,000 users, generating $2 million in revenue. This success demonstrates the power of lean startup methodology in disrupting the education sector. The Frugal Millionaire podcast hosts demonstrate lifestyle optimization through disciplined saving. They reduce their expenses by 50%, cutting unnecessary spending to free up more money. This allowed them to pay off $200,000 in debt within just 2 years. By redirecting their savings to index funds, they benefited from long-term market growth. Their net worth reached $1 million, showcasing the power of consistent saving and investing. This success story has inspired over 1 million followers to adopt similar habits. Warren Buffett, one of the world's most successful investors, strongly advocates for long-term investing. He warns against the dangers of short-term speculation and emphasizes holding quality assets for extended periods to capture the power of compounding returns. Elon Musk praises Path 2 for driving innovation, particularly in sectors like electric vehicles and space exploration. His entrepreneurial ventures demonstrate the potential of disruptive technologies to create wealth and impact. A UBS study found that 65% of millionaires attribute their wealth to multiple income streams from the 3 paths: strategic investing, entrepreneurial ventures, and lifestyle optimization. This highlights the benefits of diversification and pursuing various wealth-building strategies. Entrepreneurial ventures created 15 million jobs in 2025, according to the U.S. Bureau of Labor Statistics. This highlights the significant economic impact of startups and small businesses. Additionally, AI powered tools boosted startup success rates by 25%. Lifestyle optimization led to a 20% increase in personal savings rates in 2025, according to Federal Reserve data. This approach frees up capital for strategic investing and entrepreneurial ventures, accelerating wealth accumulation. The 2026 Wealth Roadmap offers a flexible framework for building financial independence. By diversifying your approach across strategic investing, entrepreneurial ventures, and lifestyle optimization, embracing technology like AI tools, and staying informed about economic trends, you can navigate the evolving landscape and achieve your wealth goals. Good luck.